even though US equity did have a great quarter, cash like ETFs also are crushing it. So I think people are buying beta, but they're buying cash with it to make themselves feel a little better about everything, and a little gold. Gold's having a nice flow a year after getting blown out by Bitcoin last year. Gold's finally starting to get some money. So I think gold and cash are being bought with beta. That might be the one thing you see in the retail flows that's a little bearish. This year, you're going to see like upwards of 50 mutual fund companies just bolt on an ETF share class to their mutual fund. This is big.
Right.
If it were for the market this year, this story would be a lot higher on what's going on. It was all the talk at the last ETF conference.
While stocks soared this quarter, something unexpected happened. Investors quietly poured billions into cash-like ETFs and gold funds. It's the ultimate hedge play, chasing market highs while stockpiling safety nets. After getting crushed by Bitcoin's rally last year, gold is making a stealth comeback, revealing investors' growing anxiety even as indexes hit records. ETF guru Eric Balchunas drops the bombshell. This year, you'll see 50-plus mutual fund giants suddenly turn into ETF players. It's the industry's best-kept secret. This tectonic shift in fund structures was the hottest topic at recent conferences, proving even Wall Street's old guard can't ignore the ETF revolution anymore. The real story? Investors are playing both sides, loading up on risk while hoarding havens. In today's have your cake and eat it too market, the smart money isn't just buying the rally, it's buying insurance. Let's watch more clips from Eric Balchunas' interview to gain more insight. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
Wednesday, when Trump said pause, right? The market went up like, 8%? And it went up 8% in like 2 hours. It wasn't like a whole day. It was like right up. And that tells you that the Trump put was there, I think, because one word did it. He, caved, you want to call it, or pivoted, but that did show people, in my opinion, also that if you were somebody who was just vanguarding away, you're probably like, that's why I was vanguarding away, because who the hell knows when this stuff's going to happen. The other thing that was interesting about that Trump put day was all of the degens were piling into triple leverage Qs and triple leverage semiconductor ETFs. The leverage 2x long ETFs have shattered their records and flows. So the degen crowd kept buying the dip, even on the way down. And I was like, man, at some point they're going to get tired of this because they're just losing. But then that day, Soxal was up 50%. And, my metaphor is you go fishing, you catch a marlin. You are going to go fishing again. So that is only going to re-embolden the degens to keep buying the dip. And it's going to re-embolden the I can't market time Vanguardians to think they can't market time. So that one Trump put day to me says, if you're hoping for some big crash, I mean, you might get down days, but I just don't see it given the resolve of these types of investors who use ETFs. They just, both the degens and the Vanguardians seem to be like really into buying the dip, regardless of what they hear or see. I will say European ETFs do have 7 billion in flows this year. That's pretty good for a category that has 40 billion in assets, right? That's a pretty good percentage uptick. But that number was like 1 or 2 until like a couple of weeks ago. So it finally, here's the thing. I always say people have seen this movie before, but it's really more like a short film. Europe has this like good quarter, even 5-6 months, and people are like, I'm not biting on that. It's like a fish that just knows it's bait. Now we're in April, some flows coming in, and the flows will help drive up prices. So, I think you see a couple more months of this, you could see some real movement. But I think for the most part, people are still committed to the US, doing a little rebalancing. Gold is 7 billion too. So gold and Europe are taking the same out. And gold had struck out last year. It was up a lot, but it took in nothing. I think Bitcoin stole its thunder a little bit. I think Bitcoin's sort of like the young, I call it teenager gold. It's sort of like last year people craved hot sauce more than protection anyway. So Bitcoin plays that hot sauce role. So people bought into Bitcoin. It was new, it was returning great. And gold was good, but Bitcoin was great. Now this year, gold, in my opinion, got a big W. I mean, it really worked. It has hedged your portfolio. I told the Bitcoiners, you got to just tip your hat sometimes. Like, I know Peter Schiff is out there spiking the football every other day. But in the way he earned it, that said, if you zoom out even a little bit, I mean, Bitcoin's still way above. So my metaphor here is it's like Ohio State, Michigan. You know how Michigan has just started winning? That's like gold, but Ohio State is like won like 16 of the last 20, and that's Bitcoin. So I think this rivalry between these two is really fascinating. It reminds me of football rivalry in that it's just like it's like true contempt there. I mean, it's just like just honest to God hatred, even though they have a lot in common. They both want to hedge inflation. They think governments are not trustworthy. Like they're actually way more aligned, but I think they're competing for the same type of audience. So they are very competitive, and it's fun to watch, interesting to watch. But I would say gold is having the better year. Although we wrote today about how Bitcoin was arguably more stable. Just the fact that it's above 80,000, I think, is remarkable to me because it was at 30 when the ETFs came out less than 2 years ago. So the fact that it was able to go up and stay up there after all this, it's kind of gone down like beta. It hasn't gone down maybe a touch of high beta, but it's not like the Qs on steroids anymore where it goes down 50% when the Qs goes down 25. And I think our theory is that it has better owners because over the last 20 months, all these like governments that confiscated Bitcoin, FTX lawsuits, GBTC captives, these were bad owners. They dumped all their Bitcoin and bought it, the ETFs and Michael Saylor. These are good owners. These are way less fickle people and less retailish. I think the ETF money is largely smart advisors, retail, those types who understand behavior. And so I just think and we've actually seen the volatility, it's stabilized since the ETFs came about. It's still 70% 90-day, but the volatility of the volatility is flatlined. It's just solid 70, but back in the day, it could get up to 150. The other thing is the correlation to the stocks is actually creeped down a little too. So it's decoupled a touch. I still wouldn't, if I'm selling a Bitcoin ETF, I'm not telling some retiree or someone like Boomer, I'm not saying this will hedge the stock market. I'm going to tell them this is like hot sauce. It still behaves like a risk asset. If it doesn't, consider yourself lucky, but don't expect that. But it is, in my opinion, a hedge against the global money printer long term. But it's still too young. Gold's 4,000 years old and behaves like a true alt. I just don't think Bitcoin's in that category yet. I would just look at it like commodities. Gold has 80% of the share. Silver has 10. Platinum and palladium have 5 each. And then the futures commodities have their own little wing, but it's pretty small compared to the precious metals. It's going to be like that. I think the further you get away from Bitcoin, the less assets there will be. So spot Bitcoin to me is going to rule the world in that category for a long time. I don't see anything changing that. Ethereum did okay. In a normal launch, it would have been successful, but it came after Bitcoin. So my metaphor was it's like the opening act having to follow the headliner. It was just in a doomed position, even though it did pretty well. Ether also had terrible performance, whereas Bitcoin had good performance. So timing can help. If you launch and your stuff goes up, it's easier. So Ether kind of just had like I said, it was like trying to follow Hendrix or something. And you're like a band with like one hit song. It's just impossible position. So Ether will exist, but it'll always live in the shadow of Bitcoin. And then you've got the new kids on the block coming, which is like Solana, XRP. They have futures-based versions of those out. The spot one's not approved yet, but the futures ones have been okay. The XRP one is done a little better. Solana a little less, but these are not the best guinea pigs, but they're the only guinea pigs we have. But it tells me that like if you issue spot Solana XRP, you're going to have like a couple billion. You're not going to set the world on fire here. And then you've got this then we get into silly season. There's going to be a Trump ETF, a Melania ETF. There's going to be a 2X Melania ETF, Doge. And then there's stuff I never heard of like SUI. There's a Bonk. I got to Google every third filing now. No, it's serious. I'm like, what even is that? So there's a lot of stuff coming out now. Every now and then, one of the commodities catches fire, like coffee.
When a single word from Trump sent markets soaring 8% in hours, it revealed two truths. Leveraged ETF traders will keep gambling, and Bitcoin's shockingly matured. The original crypto now holds $80,000 with stabilized volatility as ETFs replace weak hands with institutional buy-and-hold money. Meanwhile, Wall Street chases meme madness, from 3x semiconductor bets to bonkers bonk token ETFs. Gold's having a comeback, but Bitcoin's still winning the long game. While meme ETFs like bonk grab headlines, Bitcoin spot ETFs are revolutionizing finance, offering institutional-grade access at just 0.20% fees. As Bloomberg's Eric Balchunas observes, even silly tokens could gain traction in cheap ETF wrappers. Yet Bitcoin stands apart, surviving multiple 70% crashes to become the digital Second Amendment against currency debasement. According to Eric Balchunas, ignore the crypto circus. Real value lies in Bitcoin's unique blend of durability, liquidity, and anti-government superpowers. In ETFs we trust, but Bitcoin's the real deal. Let's watch more clips from the interview.
The coffee ETF gets some looks for a year. That's what's going to happen. Like, let's say the bonk ETF goes wild. It'll be a flavor of the month for a minute, and then it will die down. That's how I see all of this playing out. The crazy stuff will get media attention, but it won't get much assets. The same thing we see with the theme ETF. Some of these themes get crazy, but most of the money is in like natural resources and infrastructure, the boring stuff. But we in the media, we're always, looking for good copy. So I think we're going to cover this a lot. And anything new is interesting. I mean, this is a whole category of crypto that was opened by the Bitcoin, and it's like a Pandora's box that's just opening, and it's so new that we will definitely cover a lot. But I would look for the boring spot Bitcoin ETF to continue to dominate by far.
Where are you seeing the fees come out on these more esoteric versions that are in the pipe? Are they still razor thin like the Bitcoin ones, or they're a little bit wider?
So they're about the same on Ether, but the XRP ones that came out are really high. But one's leverage, one does futures. Once we'll call it like the horse race. When 9 or 10 of them launched at once, they actually all had a fee war, and it brought their fees down to like 20 basis points. Same thing happened with Ether, but with the XRP, there's been these fluky one-offs, and they charge like 1%. So what will happen is when spot Solana and spot XRP come out, BlackRock isn't in that, but I think Fidelity is. I don't see them going to 20 just yet, but they might be 30, 40. But you have to understand, the other reason that the US spot Bitcoin ETFs are so powerful is that 20 basis points for what they do, plus super liquidity, right? The spread is always 1 basis point. Compare that to what was out there. GBTC was 2%. European Bitcoin ETFs were 1 to 2%. Hedge funds are 1 to 2%. So it was literally like, 5 to 10 times cheaper with super liquidity, with brand names. And if you look at any advisor survey of what matters, it's brand, fee, liquidity. Like, those are important. And they had really strong showings on those. So the more that these coins are launched in the ETFs, especially under this spot in the 33x spot product, like a GLD, it will help those coins generally, because the low cost liquidity and brand names are very powerful. Even if you put dog shit, if you have a liquid ETF that's cheap and holds like dog manure, I mean, it's possible to get some looks just because that's such a good deal. There was a study that showed people who have Amazon buy twice as much shit than they do if you take the app away. Simply because it's so easy.
Yeah.
So you add friction, or you take away all that friction, cost, your wallets, all that, and you just say, you click a button, you own this thing. It's so powerful for that underlying asset. The problem for the other coins is it's just the audience shrinks every time you get to a new coin. This really made me think, what else has gone through 70% drawdowns like 3 times? Right?
It's true.
And come back. This is where it differs from Beanie Babies and like Don Mattingly rookie cards, is that those things go down, they're just gone. This has survived like 3 or 4 of them. And someone pointed out, what else has? Apple. Amazon, Google, these stud Mag 7 companies, most of them have survived these sort of near-death experiences multiple times. Even if at the end of the day, I'm Boglian in the fact that there are no cash flows, it's only worth what someone else will pay. It's like a commodity. You have to acknowledge that. What I don't think the crypto people understand is that they don't understand that stocks have cash flows, and you get your money works for you. You are an owner of the company, people get up, create value, and you get a piece of that value. They think it's just something that just trades like on a casino, just like Bitcoin. They don't understand the intrinsic value or the investment return. They just think it's all speculative. And I think that's where the crypto people are a little screwy. But the TradFi, I think, underrate Bitcoin for its survivability and some other things. I think the crypto people underrate stocks and bonds to a degree, although bonds haven't been great for 10 years. But stocks in particular, I don't know if they understand how it's different than a commodity. I just think you have to acknowledge what the young people are doing, what they care about. But I know, like, my kid had the stock picking class, and the whole goal is who can pick 5 stocks, do better in 3 months. Well,
isn't that the worst? That's the worst thing ever.
Thing.
The worst program ever.
Yeah. So the whole educational system is one issue. The second is young people like to have their own thing. For me, it was like cool bands and stuff like that. It's different now. I think it's more like they like that. It's Apple's like a boomer stock or something. So I get that. I do think also young people, as they get more domesticated, get married, have a mortgage, they'll move over to more 401k-ish money. I do think like a lot of the crypto bros are single, so they can be all in. So I do think some of that will change over time. But once you get into something young, it's really powerful because you're just comfortable with it. And that's why I really respect it and I don't dismiss it. And, but I can't get away from the fact that ultimately it's a commodity. I mean, that's this guy that I like to follow. He's more of a retail investor, but he's into crypto, but he's just good at explaining things sometimes. He called crypto or Bitcoin, the Second Amendment of money, which is that it is protection from your own government debasing your currency because they can't F with the Bitcoin. And because it was sort of modeled off of Cold War technology of a decentralized system that couldn't be nuked, it's nuke proof. I mean, government can't really, even if you're trying to shut it down. It's nice having something that is government proof. That is powerful also, in my opinion, but that still doesn't change the fact that it's a commodity and doesn't have cash flow. So that's why I like both for me. But some people, there's camps, The
Bitcoin ETF revolution has reached a fever pitch, with investors pouring nearly $4 billion into these funds over 8 consecutive trading days, a stunning show of confidence in crypto's hottest financial product. This unprecedented inflow, tracked by Bloomberg analyst James Seifert, pushes total net deposits to $38.52 billion, proving Bitcoin ETFs have become the gateway of choice for institutional capital. As financial expert Eric Balchunas has observed, these ETFs solve crypto's accessibility problem by letting investors gain exposure through traditional brokerage accounts, no complicated wallets or private keys required. The numbers don't lie. When you combine Bitcoin's inflation hedge potential with the convenience of familiar investment vehicles, money floods in. This tidal wave of institutional interest creates a self-reinforcing cycle. As ETF issuers scramble to buy enough Bitcoin to back their shares, they drive up demand and price. Grayscale's recent launch of a Bitcoin-adjacent ETF shows established players are doubling down on crypto infrastructure. Yet beneath the euphoria lies a fundamental shift in how Wall Street views digital assets. Bitcoin is no longer a speculative gamble, it's becoming a legitimate portfolio staple. While volatility hasn't disappeared, these ETF flows prove major investors now see Bitcoin as both a store of value and a growth asset. The message is clear: the financial establishment has voted with its wallet, and Bitcoin ETFs are the vehicle of choice for crypto's next chapter. With adoption accelerating, the question isn't whether to include Bitcoin in portfolios, but how much. As we wrap up, after $4 billion in 8 days, How high do you think Bitcoin ETF inflows can go? Let us know your thoughts in the comments below. Share this video and hit the like button. Thanks for watching, and don't forget to like and subscribe.